Hello everyone, friends. A fresh review of Bitcoin. Well, yesterday our Bitcoin continued to correct. Almost $76,000 for Bitcoin. We touched it. Now naturally it bounced back. Traditionally, actually $81,500. But as you understand, the premise for correction, we still have it. Therefore, today I want to talk about this in more detail and speculate a little, discuss with you how this correction might potentially occur. And in general, can our current cycle theoretically differ fundamentally from those that were before, including the bear cycle? So today we'll talk about this. Let's move on to the charts. Be sure to like this video, and I strongly recommend subscribing to my Telegram channel to not miss any important information or updates. Make sure to join and subscribe. Links are under the video. My Telegram channel is Falcon Investors. Well, now let's get down to business. Briefly about Bitcoin first, then we'll move on to the interesting information I've prepared for you today. So, look, regarding Bitcoin, the key zone, it's marked with a purple box. We're slowly cutting through it. That is, I can't say that this zone is really holding. That is, we came into it, bounced back a little. Then we fell below. Again, bounced back a little. The zone is gradually holding us, but we are trading through it. In fact, it's easy to imagine a scenario where we keep cutting through, falling lower, bouncing back, falling lower, bouncing back. That is, no one is saying that we will just go down with one short candle, leaving a shadow. Leave it, take it, and bounce back. No, we can calmly keep cutting through. Moreover, in general, there are prerequisites for this downward movement to be prolonged. That is, we might not see a sudden squeeze, the so-called flash crash with a bounce and subsequent growth. No, let's keep in mind the scenario that we might be here, just cutting through very, very slowly like this for a long time, cutting, and only then start to grow. That is, in general, even I have laid it out. This extends for me until the end of May, but let's assume that this cutting could last even longer. That is, this correction, I wouldn't think that we will get away so easily now. Just quickly go down, take all our orders, and continue the upward movement. No, let's prepare for a more negative scenario. That everything could potentially happen exactly as I assume, but timing is everything for us. That is, in terms of timing, unfortunately, it's very difficult to predict how this will develop. Therefore, regarding Bitcoin, look, we now have a second strong resistance zone has appeared. The first is $92,000. You remember that this is a key level above which we need to move to continue growing. But besides that, we are now also holding below $85,500. This level is set by this low, and now we are trading below it. Therefore, overall, I allow for the scenario that we might even bounce back here and then continue. Again, a downward movement. Actually, to talk here about a reversal, some kind of model, the first level where we need to hold is exactly the second. All. These will be the scenarios for continued growth. Otherwise, I still expect a deeper correction. This is the 63.73 zone, which I have marked right here. And from here, accordingly, further upward movement. I partially published some positions in the Telegram channel. Yesterday, when my orders started to fill, I also published I had orders placed below 78,000. They are still below, so if it goes lower, I plan to buy accordingly. So, if we talk now, look, on the 4-hour chart, I'll show here a little thing. The thing is, in this very consolidation, this is the nearest level that we actually touched yesterday. Here, please take a look. We reached it. Accordingly, further on, we have much more liquidity. All this consolidation with its maximum volume in the $63,000 zone, which is currently a good specific magnet for me. Hence, this bounce to the dead cat. For me, it is not any kind of reversal right now. I think there's nothing here. Well, at least I am betting that there will still be a move downwards and only then an upward movement. Now, again, let's talk about how this might potentially happen. Before that, a little reminder, my dear ones. If you are trading, trade on a quality exchange. For me, Bybit has been a reliable partner for many years. Therefore, if you don't have an account, I strongly recommend registering and trying it out. Using my link, my promo code under this video, the most favorable commission conditions and up to $30,000 bonus on the first deposit. Now let's move on to a more interesting picture. So, let's look, remember, yes, let's go to a more... No, here I already have a sketch prepared for you. So, let's look at Bitcoin. Remember, yes, accordingly, a huge upward movement like this, then such a correction, and again an upward movement. And now let's open it together. The gold chart. Actually, we constantly compare it with gold, right? We have like digital gold and regular gold. It's clear that with Bitcoin, everything happens with a kind of acceleration. Everything happens a little faster than it did with gold. But nevertheless, let's imagine that we had this cycle of movement. Let's just, yes, take a look now. Why am I talking about this one? The cycle of movement from around 2000 to 2012. I have specially prepared a few points for you. because essentially gold was rising. At that time, for the same reasons, Bitcoin was, look, the dot-com crash, investors are seeking a safe haven. That's the first point. We also have global changes, and investors were looking for a refuge for their money. Yes, the global financial crisis, trust in banks, and the dollar is declining. The same thing that has been happening to us in recent years. The debt crisis in Europe. What is happening to us now, essentially, then aggressive decline, money printing, inflation, we understand, yes, essentially the same. Then the Fed lowers rates to zero. It's the same as what we had, printing $2 trillion amid inflation concerns. Absolutely the same as what was happening to us now. The DXY dollar index fell from 2002 to 2012. So look, essentially, we have a commodities boom here, again, and we have commodity assets, and now we have a crypto boom, which has been happening over the last few years. That's why I compare it, not in terms of how the charts look similar, but because this gold boom is very similar to the crypto boom that we experienced. And the factors behind it are very similar. Now, let's actually take a look. Before this, look at how our cycles occurred. If we look at this chart, it is just surrealistically similar to the crypto chart. This is our first cycle. Here you go. Yes, our second cycle, our third cycle, then a deep correction occurred, and the next cycle 4 began, in which we seem to be right now. Then look, what is happening here? Interestingly, all these previous cycles were followed by a very aggressive 70% correction. Yes, here, for example, as much as I've looked, let's see, 50% for gold is quite a lot. Accordingly, here, our picture changes significantly, the power has grown greatly, and then, yes, we have a correction, but it is much less severe than what happened before. We stayed here, corrected, lingered in a sideways movement, then returned, traded a bit, and that's it. And then we continue with extreme growth. That is, the structure of the cycles has changed by itself. It shifted from an aggressive, harsh correction. Moreover, here you should not look here, for example, but rather at this bottom, which is more than 70%. Here, accordingly, we saw a different picture when we saw a small correction. And then gold soared again through such a consolidation. And actually, the prerequisites, there were quite a lot of them. Now, if we look at the Bitcoin chart, and since there's acceleration, I'll be looking at a slightly different time frame. Nevertheless, look at how similar the picture is. We have aggressive cycles, aggressive corrections, but let's assume now we hypothetically allow, I even mentioned in previous episodes that in the next one, and I drew in the Telegraph channel, you even remember the expectations. Let me open it specifically so it's clearly visible, pair by pair. Here, please, I drew charts showing a drop below a surge and then a correction to $40,000. Let's assume that this might not happen at all because we have institutional investors, we have large capital coming in. And what does this tell us? It always indicates a reduction in potential volatility. I mean, the range, locally, of course, there can be any kind of volatility. I'm talking about a more long-term perspective, and perhaps it makes sense to assume that we might never see such a correction again overall. And what seems to us now as a drop at such levels is extremely frightening. Imagine what will happen if Bitcoin, it will gradually descend to somewhere around the 60,000 zone dollars. At this moment, everyone will be completely wrecked and catapulted from the market because everyone will understand that a bear market has begun, a harsh bear market. That's it, we're heading to $30,000 to $40,000 and we'll buy back there. And at this moment, the market simply turns around, Bitcoin leaves and never returns to these levels again. This is an interesting thought for you. I don't claim it to be the truth, but it's just something to think about. Yes, a very similar picture, maybe back then with gold. We have digital gold. In general, we have very similar, yes, conditionally limited emissions with gold, right? A protective mechanism against inflation. And Bitcoin is the same, with limited emission, even with the deflationary model, because a huge number of Bitcoins are lost every year, and so on and so on. And in fact, very similar things are happening in the economy. Factors. Here's a little something for you to think about. This kind of picture is about perspective, generally about decision making. Therefore, in fact, I will continue to buy. There were thoughts about why I even started thinking about this, because during previous bear markets, what was the picture? If a bear market starts, it's better conditionally. 6-9 months, not to buy anything at all, wait for a deep drop, and then conditionally start buying in 9 months. But what if this time it's not like that? What if this time it will be completely different? And what if, in reality, what we are seeing now is already a kind of bear cycle, just a little different? And then it will conditionally continue a super cycle. Yes, states will start buying Bitcoin, and the United States and Europe and so on, and the whole picture will be completely different. Pay attention to the timings. I have this high here, so to speak, December 2027, 2028. That is, perhaps all this will stretch out. It won't be very fast and it won't be very pleasant for us, as before, with huge volatility, spikes up and down. But I will definitely keep this picture in my mind. And kind of keep it in mind, buying and justifying to myself why I am buying at such levels, which might seem quite expensive. This is something for you to think about. That's all, my dear ones. Whether you agree with this thought or not, if you have any alternative opinions, be sure to write them down. And as for everything else you need to know today to get the maximum profit in the market, be sure to subscribe to the channel, hit the bell so you don't miss new releases. And of course, every comment is very important for me. So don't be lazy, go into the video, hit the like button, and write your opinion in the comments. If you don't know what to write, just leave any comment. That's all. Wishing everyone big profit. See you next time. Bye-bye.